Hello and welcome to another update video about the DXY. Only a quick update here today because I did explain the larger or the higher degree wave count in the previous videos, but just to briefly summarize, there are two main scenarios I'm following. The first scenario is that the DXY topped here at around $115 back in October, and that we are, as the first scenario, it's actually my main scenario, and that we're now coming down in an A, B, C correction. When we topped, this was a higher degree, wave 1, yeah, and we're now coming down this ABC correction in a wave 2. I'm on the, need to go to the daily chart here, ABC in a wave 2. We are in a channel, and possibly the support for this wave 2 could be the lower support line of the channel, but we're a bit too far away from that to really determine that. So that would mean that very, very shortly we should move up in a wave B and then come down in C. That will take a while to play out. The second scenario, it's not my main scenario, indicates that we did not top here. Yes, we made a local high, but it was not a wave 5 of 1. It was actually only a third wave, and we're now coming down in a fourth wave, and will then move up in a fifth wave, push a little bit higher, and then start this wave 2 correction. So in the very short term, these counts actually will operate very, very similar, in very similar waves or ways. We come down a little bit lower, will then move up and then come down. It's just in my main count, we are already in this ABC correction, and in the alternative count, we are in a wave 4, we'll move up in 5, and then start the ABC correction. So in the short term, very similar, because in both, we would very shortly move up. The two counts differ in how far we will go up. With the B wave scenario, we should ideally not go above $114. In the wave 5 scenario, we could go all the way up to, in my opinion, $120, which is actually from 2001, this B wave high. So this could certainly act as resistance. Okay, now that we've talked about that, let's talk about the lower level wave count, because we are still in this descending wedge. Explained to you in the last few videos already that as long as we are below $107, we can actually focus here further on the downside for one more low. So just to explain, this wave A is, in my opinion, not finished. It could be, but I would not be able to tell you that until we break above $107. So let me show you the more detailed count. So we would come down, or we did come down in a wave A, we moved up in a B wave, and we're now coming down in a C wave. The C wave is a 5-wave structure. And if we now look at the subwaves of the C wave, you can see that the blue count is sort of the main count, 1, 2, 3, 4, and 5. So there should be one more leg down. We don't necessarily need that additional low, but as long as we stay below $107, my view is that we're going to get another low. Why is that? That is because if we break above the $107 level, then we would break above the 50% fib retracement. And that would make it very likely that this is still a wave 4. It would basically be too bullish. That would mean if we break above $107, or let's say 108, we are most likely already in this wave B, yeah, that will go to the upside, or the wave 5 in the alternative count. But the primary expectation, it just works better with the lower level, let's say proportions. Primarily, yeah, I expect that we bottomed here in the wave 3. We now have an ABC pattern in wave 4. So very shortly, we should move up, because we have already in this pink wave B, we already have 3 waves. At least that's my primary expectation. I mean, we don't need to push higher in wave C. Maybe this was already the wave 4. Yeah, it was a bit short, but it could be that this was already the wave 4. It's just that we need to be ready for a higher wave 4 still. Maybe all the way up to 107 or 108 US dollars, yeah, before we then make that final low sort of in the region between 100 and 103 US dollars. So that's where we are. I mean, if we look at just the retracements now for the B wave, you can see that we've now reached the 61.8% fib level. Actually an ideal place to turn around. Maybe we also come down to the 78.6% retrace. That is at $104. Going below that would put more emphasis on a direct sell-off. Yeah, that we don't get this C wave up anymore. But yeah, that's my quick update about the DXY. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye bye.